turn it on. Okay, good afternoon, ladies and gentlemen. We have one item in our public agenda. I'll look for disclosures of pecuniary interest. Councillor Usherson says regrets he's not feeling well today. Any disclosures of pecuniary interest? Seeing none, I'll move to the number one item. Do you want to introduce it, Mr. Hayward or Ms. Barbon, which is the two?
It'll be me. So basically, we're just wanting to bring to you a debenture issue. We got an excellent rate, which has improved our budget position a little bit by about $59,000. I'm stealing all of Jason's thunder, but maybe I should let Jason speak to it.
Okay, Jason.
All right, through the chair, just wanted to start off by saying thanks for attending this special meeting and accommodating that within your schedule. We really appreciate it. In terms of the debenture issuance process, there's certain timelines we have to achieve and meet, and there's not a lot of, there's a short window of time to do that. So once again, thanks very much. In terms of this report, we came back to the Corporate Services Committee back on February 14th, and that was to authorize us to proceed with the issuance of $41 million in debentures and secure a good rate. We've worked now with our fiscal agent team and our syndicates to go through the process. Based on the market conditions and what we were able to achieve, I am pleased to announce today that we were able to secure an all-in net rate of 2.48% on a serial debenture on the full $41 million. So that's a very good news story, I think, for this administration, council, and the community. As Martin has alluded to, this has created a bit of savings in our corporate budget. In terms of the property tax supported budget, the savings is approximately $59,000 per year. And then in terms of the overall budget, which includes tax, water, sewer, it's approximately $100,000 per year. In accordance with our debt management policy, if there's going to be savings in our debt servicing line items, we are recommending, consistent with policy, to reduce authorized but unissued debt. So that's kind of a general overview there. Now, in terms of getting the process done, each year we have a different lead fiscal agent, so it's on a rotational basis. This year's lead was RBC. We do have two representatives here from RBC with us today. We have Mr. Paul Belanger, who is the Managing Director of Debt Capital Markets and Government Finance, as well as Mansour Khan. He is the Vice President of Debt Capital Markets and Government Finance. Both these guys have extensive experience dealing specifically in the debt capital markets and specifically assisting government entities. Today we do have a short presentation that they would like to deliver. We'll keep it at 5 to 10 minutes max. If the committee is willing to do that, that would be great. And then we can follow up with any questions that you might have after that.
Welcome, Councillor. Welcome, folks. They've assured me that they are bankers. They don't tell jokes. And so we'll let them go ahead and make their presentation. We'll see if we can get a moment of levity out of them.
Thank you. My name is Paul Belanger, and I really just want to say congratulations to the city on a very successful transaction. I think you'll hear from Mansour, the all-in yield is very attractive on a historical basis. And on behalf of RBC Capital Markets, I do want to say thank you very much for the opportunity to act as lead manager. City of London is a relationship that we've had for a long time and a very important account to us. So I will let Mansour go over the highlights. 5 to 10 minutes, sounds like we should keep it closer to 5 than 10, so we'll try and do that. Thanks.
Thanks, Paul. So yeah, I'm definitely going to keep it very brief. I just want to highlight a couple of things. Starting off with, much like the Oscars this last weekend, Donald Trump remains the talking point, not only there, but also in the financial markets. If you look at what's happened in the year 2017, we've definitely seen, the expectations of what Trump might do as a leading driver of underlying rates in Canada and the US. If you look at, since October when he was elected, rates have, gone up in the US somewhere around 80 basis points or so. So that's 0.8%. In Canada, obviously, has followed suit with around 0.7% increase there as well. But if you look at the longer term trend, as you can see on that chart, it has definitely, rates have gone downwards, and historically speaking, rates are still very attractive, which is obviously where the city has benefited from the recent deal. In terms of what has been driving these rates higher, it's really the inflation expectations of what Trump's policies might be that has actually driven those rates higher. And obviously going into last December, you guys must have heard that the Fed actually raised rates by 0.25%. That was the first increase that they have done since December 2015. So right now, the overnight rates in the Fed overnight rates are around 0.75%, which is still pretty low. But given the inflation expectations, you're seeing the longer term trends, longer term rates like 10 and 30s going higher. The U.S. is following a good path in terms of growth, and that is obviously one of the factors that is contributing to the movement in rates. In terms of RBC's forecast for future rates, as far as Bank of Canada is concerned, RBC does not expect any hikes by the bank for the rest of the year. But as I mentioned previously, the Canadian rates do follow the US rates quite closely. So with the longer rates going higher in the US, the Canadian rates follow suit. Our expectation is by the end of the year, we'll probably see a 0.5 to 0.7% increase in long-term rates in Canada. In terms of the Fed, the US, the expectation is that they can potentially do 2 hikes before the end of the year. Currently, we have the next FOMC meeting in March. And the expectation that the market has in terms of them raising rates by another 0.25% is around 80% in the market right now. Before I move on to the debt issue, just wanted to give a general overview, a very quick overview of what the market looks like. Generally in the public sector, we have around over 100 billion of issuance every year, out of which around 60% is done by provincial issuers and 4% by municipals. A lot of the municipal issuance is, in terms of absolute magnitude, it's anywhere from 3 to 4.5 billion in total municipal supply that we get in a year in the domestic market. As I mentioned, it constitutes around 4%, and the top 5 issuers in the space account for around 60% of the municipal issuance. As far as the city is concerned, they've been a consistent issuer in the market since 2011, and I think it has worked really well for them. Having the persistence of basically coming to the market every year keeps the familiarity with investors, which has been very helpful. On top of that, even the AAA rating that the city has been very beneficial because it helps the city achieve the lowest level of yields when you compare to any other municipal issuers. Now, just in terms of what the cost of what the yield, the interest rate that you're getting as a city, what that constitutes of, it consists of 3 components. One is the underlying Canada rate, which is where the government of Canada would be issuing bonds or where they would have their yields. On top of that, you have the Ontario spread, the credit spread, which is where the province borrows the money. That you get to the level, that's where the province is borrowing at a certain yield. And then there's another spread for the city, which is on top of Ontario, suggesting that's the credit spread for the city if you compare it on top of Ontario. So considering all that, as I mentioned, the AAA rating has been very helpful. The city has definitely been able to fund their bonds, fund the issue at some of the most attractive rates when you compare it to other municipalities. And I'll show a little bit of that in the later slides. Another thing I wanted to mention was I talked about rates going higher. But one thing to recognize is even when the underlying Canada rates are going higher, there's an inverse relationship between what the spreads do as underlying yields go higher. So we talked about, underlying yields have gone higher by a certain percent. What has happened in the meantime is that spread that the province has and even the city has compressed. So even though, the one part of the rate is going higher, the other is coming lower. So there's a little bit of a balancing effect there that you see. So, this chart just basically demonstrates, you'll see how the Ontario spreads are actually going lower if you look at the longer trend as well, which is obviously very helpful. In terms of the issue, we have the final terms up there, but to quickly go through the process, once we actually get the council approval for this deal, when we got it on the 14th, we basically communicated or discussed with the other joint leads in terms of what the spread level should be before we went out to the market. I have to say that in terms of the spread, this is one of the tightest spreads that the city has funded in. There's a table in the next slide, I'll show that in a bit, but you'll see that as far as if you look at any other municipalities that have issued since last year, including the city's issue last year, we've got the most attractive spreads compared to anyone else. So after we went out to the investors, we had a pretty good response. We were able to price the deal on the 16th, and obviously pending the council approval, we'll be settling that, and the transfer of funds will be done on the 7th of March. In terms of who bought these bonds, it was a very good distribution. We had a combination of insurance funds, asset managers, and other municipalities supporting the debenture issue. So it was well distributed across Canada, and some of it was also placed in the United States. So we had some investor who actually participated from that, which obviously, again, speaks to the credit quality of the city, which has obviously been very well received. And this is the slide that I was talking about in terms of if you look at the other issues, you look at the spread versus the benchmark, that's the combination of Ontario plus the spread versus Ontario that I mentioned. And as you can see, the range of spreads that you see in that is by far tighter than every other deal that has been done previously, which is obviously a great story. And we're very pleased with the result in terms of getting the attractive levels that we did. So that's basically concludes our presentation, really. We're open to any questions, and hopefully, once again, I want to congratulate all of you on a very good transaction.
Okay, thank you very much. I'll turn to members of the committee. Any questions for Canada's largest financial institution, RBC, today, or for our staff? Okay, if there's no questions, I want to extend my thanks both to folks at RBC, but also to our staff. I know it's not the most exciting thing, but it is a very important thing. It allows us really significantly to move forward at a good rate. So thank you very much, and to Jason and to Martin and Annalise, well done. I'll take a motion on this item, please. The seconder. Any further discussion? Councillor Helmer?
Thank you, and I just wonder if perhaps Mr. Sinise, if you gave us the sort of annual savings, I wonder if you could just total it up over the 10-year period. Sometimes it's better to have a look at the total.
Sorry, annual savings? Is that the question?
Yeah, I said 59,000 on the tax supported, 100,000. I imagine that's 590,000 and $1 million, but I just wanted to check.
Through the chair, excellent question. You're very close, actually. So, yeah, in terms of the property tax supported budget, as I alluded to, $59,000 per year or $587,000 over a 10-year borrowing program. In terms of the total portfolio, tax, water, sewer, $107,000 per year or $1.1 million over the 10-year borrowing program.
So next year when we do similarly well in the markets, let's lead with the 10-year total. I think it drives home the point that, getting these good rates over the long period of time, like $1.1 million, we can do a lot of good with that in the city, either through canceling authorized but unissued or putting it to other uses. I just want to commend our staff and the team for leading such a good issuance.
Okay, thank you. I'll call the question.
Mr. Mayor, do you wish to vote? Nay. Closing the vote and the motion carries 6-0.
Okay, folks, that's the end of, we have two confidential items, so I'll have a motion to go in camera, please. And we'll be moving across the hall or down the hall for that purpose. Thanks, gentlemen. Thank you very much. We will not be coming back in here until 4 o'clock when we have SPPC.
It's a special meeting.
Special meeting, so no inquiries.
Yes.
Yes, this is a special meeting. This is an extra special. They're all special.
That's right, it's not a special meeting. And Mr. Chair, we're going into closed session for the two reasons, C1 and C2, as published on the public agenda.